Hi, Jonathan York by Financial Partners, looking at investment markets. Really, all eyes are now focused on the US debt ceiling negotiations. And after what was sort of positive news coming out last week with Speaker McCarthy sort of saying that, potentially they could have a deal announced earlier this week, that's now sort of stalled. And indeed, some of the Republicans are now even questioning whether the 1st of June is actually a date for the ceiling to be reached. Now, as history will show, we've had a few of these sort of debates before, and there is always a resolution. But at present, it's really going pretty much down to the wire. I'm not really quite sure if the Republicans really want to test the resolve of the global economy if the US was to potentially sort of default. Although it would be a technical default, and you'd see parts of the government sort of shut down, still it would be pretty embarrassing. And what's quite interesting as well, you're starting to see US interest rates sort of nudge up now. 10 years back up at 373, and the 2 years back up at 436. Now that's certainly quite a big move on the 2 year. That was trading below 4% sort of a couple of weeks ago. And nearly a 25 basis point hike in the 10 year as well. Interesting, one of the major US fund managers sort of done some analysis. Reckon there's around $1.5 trillion just sitting on the sidelines in cash, waiting to be deployed and waiting for this debt ceiling debate to be sorted. Now, if you put that into the melting pot as well, potentially the Fed has sort of done on its interest rates hike, potentially one more, but a lot of economists are now sort of saying they'll be on pause. I'm really waiting to see the impact of these recent hikes. Now, if that is the case, and certainly inflation is clearly on a downward path, and also you've got a little bit of a slowing economy, the US interest rate curve now is starting to price in interest rate cuts now towards the year end. And certainly some pretty major cuts, around 1.5% for 2024. Now, if that is the case, then potentially will be a pretty sort of good environment for equities. With all that money sitting on the sidelines in cash, potentially we could see a little bit of a sort of a bull run in equity markets. Interesting, DeSantis has announced that he will now be running for the Republican nomination. So he's probably the first sort of major candidate to put his hand in up and contest the nomination against ex-President Trump. Interesting as well, in Japan, the Nikkei has reached a 33-year high. So after really having sort of 3 decades of sort of just slumbering around, potentially a little bit of interest coming back, a little bit of demand coming back for Japanese equities. Also interesting with crypto as well, Bitcoin is up just over 50% for this year, but it's still more than 50% off its peaks of 2021. Really not much came out of the G7 meeting. A lot of talk about Ukraine, potentially further sanctions on Russia. Because certainly the Russia-Ukraine war just sort of drags on, and Putin appears to be becoming increasingly frustrated and sort of desperate to try and get a victory out there. Oil has come back a little bit after Saudi sort of issued a little bit of a veiled threat to sort of short sellers out there. Currently just under $74 a barrel. Now in the UK, pledging further support to Ukraine, but it's just interesting as that sort of support now among the sort of public, especially in the UK and also in Europe, is starting to wane just a little bit. Now in Europe, the PMIs are still in sort of expansionary territory, although having come back just a little bit in the latest read. Latest read was 53.3 versus 54.3. So off just a little bit, but still in expansionary mode. Now obviously Europe will be expecting quite a bit of sort of boost from European sort of tourists and spending going through in these summer months. And interesting, Greece after the recent elections there just reached an 8-year high. Now Australia is still reaping the rewards of a budget sort of surplus, obviously being helped majorly by the sort of improved relations with China and that improved sort of Chinese trade as well. And certainly the Australian economy is showing some pretty reasonable signs out there. The housing market appears to have sort of bottomed out and is now even showing some small gains in certain areas. Now that's really been on the back of the Reserve Bank being slightly more sort of conservative and sort of slower in its pace in terms of rate hikes. The New Zealand budget was more expansionary than sort of first thought, but that was probably to be expected because, you know, Labour have an election to try and win in October. Now on the budget, potentially it leads to about a further 20 billion of borrowing. Because it's got 9 billion of extra spending, tax take will be down by around 10 billion. So you're looking around 20 billion sort of additional borrowing to be needed. And despite what the finance minister said, that you know, he didn't see a need for an interest rate hike on the back of the budget, the Reserve Bank did increase the interest rates by another 25 basis points to take the OCR to 5.5. But interesting, the commentary appears to imply that you know, that's the peak now, and rates will remain at this level for some time. Now the Reserve Bank meet again on the 12th of July. Now retail spending and the latest data on that was down. That was down 0.5 versus an expected figure of plus 0.2. So clearly the rate hikes are having an impact out there, and it's just going to be very interesting now to see what happens to the housing market. Because potentially with the recent falls, and if interest rates are on hold now, will we start to see more buyers coming back into the market? Also as well, we've got those net migration figures which are plus around 60 odd thousand, so that will all add to a little bit of pressure to the housing market as well, to the upside. Now, as we're nearly in the month of June, it's a good time to check those KiwiSaver balances just to make sure you've made enough contributions to get that maximum government contribution. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.